It happened in 72 hours. I went from confident to crushed. I had $10,000 riding on a stock I was sure about. I read blogs, watched videos, followed influencers. Then boom, news broke. The stock plummeted, and just like that, I was down nearly 30%. 3 days. A year of progress, gone. But this story? It's not rare. In fact, it's one of the most common investing mistakes out there. And it's not the only one. In this video, I'm going to walk you through 7 deadly investing mistakes, and more importantly, how to avoid them. Not from a textbook, not from theory, from the trenches. If you're watching this, chances are you're not just casually curious about money. You're building something, a future, a legacy, and you know that investing is a key part of that. But what no one tells you, what the headlines never scream, is that the fastest way to ruin your financial future isn't by doing nothing. It's by doing the wrong things. So today isn't just about numbers. It's about decisions. It's about mindset. And it's about becoming the kind of investor who doesn't just make money, but who keeps it and multiplies it. Mistake 1, trying to time the market. Here's the fantasy. You see the signs, make the perfect move, and buy right before the stock skyrockets. You sell at the top. Retire early. Easy, right? Wrong. Case study. The Harvard genius who waited too long. Jason, an engineer I coached, had a spreadsheet for everything. He modeled the S&P, predicted recessions, and had a formula to detect downturns. In March 2020, as the world shut down, he kept saying, "It's not the bottom yet. The worst is coming." But the market hit bottom in late March. By the time Jason got back in, it had climbed nearly 40%. Why timing fails. 1. Emotions cloud judgment, greed, fear. 2. News reacts late, not early. 3. Even pros get it wrong. Fix. Dollar cost average. Pick an amount. Pick a schedule. Stick to it. Whether the market is up or down, your job is to keep showing up. Because the truth is, time in the market beats timing the market. Mistake 2. No emergency fund before investing. Real story. When life comes calling. Monica was 29, a graphic designer living in LA. She had just gotten serious about investing. She dumped $8,000 into tech ETFs, skipping the whole emergency fund thing. Then her apartment flooded. Insurance took weeks. She had to relocate, and guess what? She pulled from her investments at a loss, right before the market bounced. The emotional cost, she told me later. I didn't just lose money, I lost my confidence. Fix. 3 to 6 month buffer in cash. 1. Not invested. 2. In a high-yield savings account. 3. Accessible anytime. Investing is powerful, but only when you're not relying on it to pay rent when life throws a punch. Mistake 3. Investing based on hype, FOMO. Wild story, the GameStop casino. Andre, a new investor, made $1,400 overnight on GameStop. He was hooked, put in more, watched Reddit, even skipped work, but the wave crashed. In less than a week, his $6K was worth $900. He didn't just lose money, he lost trust in investing itself. Psychology of FOMO. 1. Herd behavior. 2. Fear of being left behind. 3. Dopamine addiction from volatility. Fix. Create a personal investment thesis. 1. Do I understand the business? 2. Would I hold this for 5+ years? 3. Is this price fair or hyped? Your strategy should never start with Twitter. It should start with you. Mistake 4. Investing without a goal. Real story. The confused portfolio. Carlos had 3 crypto wallets, a Robinhood account, a 401k, and a stash of gold coins from his uncle. When we sat down, I asked him, "What's all this for?" He shrugged. "Wealth, I guess? That's not a plan. That's chaos." Why you need a compass. 1. Goals guide decisions. 2. Strategy flows from purpose. 3. Remove shiny object syndrome. Fix. Set smart goals. 1. I want $200,000 in 10 years for a house. 2. I want $1 million by 60 for retirement. 3. I want $500 a month passive income in 5 years. When you have a goal, investing becomes a tool, not a gamble. Mistake 5. Over-under diversifying. True story. The 50 stock folly. I once reviewed a client's portfolio. He had 51 different stocks. He thought he was diversified, but when I checked, 40 of them were in the same tech sector. One market crash and boom, he was hit hard. The balance. 1. Too little, ill risky. 2. Too much, ill's diluted focus, hard to manage. Fix. Core satellite approach. 180% in index ETFs, S&P 500 total market bonds. 20% in individual stocks or sectors you deeply believe in. Diversification is not about owning more. It's about reducing risk while preserving growth. Mistake 6. Emotional decisions. Real case. The war panic sell. In early 2022, just as geopolitical tensions rose, Amy panicked. She sold her long-term holdings at a 17% loss. 3 weeks later, markets recovered. She was devastated. What happens in your brain? 1. Amygdala takes over. 2. Fight or flight mode. 3. Logic gets hijacked by emotion. Fix. Investor emergency protocol. 1. Revisit your thesis. 2. Review your time horizon. 3. Sleep on major decisions. 4. Phone a financial friend. Great investors aren't emotionless. They just have systems that save them from themselves. Mistake 7. Waiting too long to start real talk. The 47-year-old beginner. At a seminar, a woman asked, "Is it too late to start?" The speaker paused, then said, "The best time to plant a tree was 20 years ago. The second best time is now." She cried, because no one had ever told her that. But here's what's wild. She started investing $500 a month at age 47. By 67, she could have over $250,000, even conservatively. Fix. Start now. Start small. Even $50 a month over 30 years turns into $60K, $100K. That's real power. The enemy isn't the market. It's procrastination. It's the belief that you're not ready. But the truth? You are. The invisible cost of mistakes. The 7 mistakes we talked about today aren't just financial. They're deeply human. They come from fear, from noise, from inexperience. But now you know better. And when you know better, you do better. This video wasn't just about avoiding losses. It's about gaining clarity, confidence, and control over your financial life. Let's make this real. Drop a comment. Which of these mistakes have you faced? Or better yet, what lesson are you taking forward? And if you haven't seen the rest of the Investing Basics series, go now. Watch them in order. Build the foundation.